So you're telling me that you've turned a 45 to 60-day insurance quoting process down to 7 days?
That's correct.
Not Welcome back to NEMT Experts. I've got an innovative guest with me today, Niko Fotopoulos, the co-founder of Sparx, a game-changing tech company that is helping NEMT businesses get insurance way faster than they usually would and cheaper. Niko, how you doing?
I'm doing well, Nirav. Thanks for having me on, and excited to give a little insight on some questions that we've constantly seen NEMT operators ask. A lot of things around why the rates are going up, and some of the things that we're doing to combat that.
Yeah, sounds good. So let's jump into topic number one. There are changes in insurance rules from some of the big brokers like MotiveCare that are getting instituted these days and are catching NEMT businesses sort of blindsided. Can you talk to us about what's going on?
Yeah, so I'll start with MotiveCare just because we have partnerships with them in several of their larger state markets, and some of the things that we're seeing. Honestly, like you mentioned, take a lot of these operators by just fully blindsided. So what we're seeing now, North Carolina is a great example. MotiveCare has started to shut down operators that don't come in with what's called Symbol 7 coverage for their autos. Symbol 7 is their scheduled autos, which is a type of policy that covers when you give a list of all of your vans for your insurance, it covers those specific vans. If you want to add vans during the year, it's a little bit of a painful process. If an employee accidentally uses their private car or private van for a transport, just because that's all that was available, it doesn't cover that. So it's a very limited version of the more broad Symbol 289 coverage that some operators may have been seeing recently, because the groups, some of the larger groups like MotiveCare, are being forced to switch over to that requirement. So I'll go into those in a second, but what we're seeing, which becomes very tough, is that these transport brokers are not conveying this new requirement quickly enough or clearly enough to these operators. So they end up renewing their typical coverage, the thing they've had for past 3, 4, 5 years. And it leaves them fully non-compliant with MotiveCare. So folks come to us where MotiveCare might be 30, 40, 50% of their total rides. And they just got the note that the renewed coverage they have no longer covers what MotiveCare needs it to. So we've been working with a lot of groups on adjusting their coverage, sometimes even post-renewal, to be able to take on this Symbol 289 coverage. And we've seen that now in a few markets where operators are, again, not being told upfront, not being given enough information, and it leaves them scrambling for new coverage so that they can keep taking rides. I've seen now multiple cases of operators who are out of business for 2 weeks to a month just because they're waiting on these insurance changes to take place. Whereas if they were better told of these changes from their transport brokers, they'd be in a far better spot rather than scrambling at the last minute. So what we've been seeing there for those coverages, switching from the Symbol 7, which most folks have, that's probably the most classic coverage in the space, to Symbol 289, this more expanded coverage. We've seen that mostly in the losses of the insurance market. So markets like North Carolina that we've been looking at a lot, there's been honestly an unheard of number of claims and losses that have come together in the past 3 or so years post-COVID. Insurance largely is a lagging industry. So what we see is that as these claims total, the insurance market follows behind it. So 3 or 4 years after all these claims come about, the insurance market then catches up and starts to impose these rate increases these new requested coverages to the trickle down parts of the market. So as insurance as a market gets harder, we then see the operators of the market also now have to deliver that bad news to their operators in the space. So what we've seen through the claims of the past 3-4 years is that Motive Care has experienced either lawsuits themselves, or their operators who have been doing a lot of rides for them have experienced really serious lawsuits that have put them out of business for larger periods of time because they were on this Symbol 7 coverage. Motive Care this year Motive Care late last year has now instituted this new, more comprehensive coverage requirement so that more of their operators are covered more consistently, and it's more in line with what we've seen for losses in the North Carolina market, just as that, using that as the example. So to give operators even like a little bit of an explanation, because many folks don't, when they just say, here's the new requirements, now go figure it out. Motive Care, having seen their operators and themselves not be more heavily covered after seeing crazy number of claims in the last 2 years, they now are looking to expand the protection that they and their operators are getting from their markets. So that's what we've been seeing on that end. That has been honestly very, very tough for the operators, and something that we've been helping a lot of folks take on after having, again, issues getting this like very specific type of coverage all of a sudden versus the coverage they've had the past 4 years or so.
Yeah. So on that last point, Niko, like let's say I'm an NEMT business. I've been operating for some years. I had no idea that there are all these changes in insurance rules coming about that are going to affect me. Like, how can I get ahead of it?
Yes. So one thing we've seen that's been successful for operators is that if they have been more proactive in working with their transport brokers and keeping up with requirement changes, they have been more successful in seeing when those changes come into place. So each of these transport broker groups have a compliance team that we highly encourage our insureds to keep in contact with, regularly check in maybe once or twice a year on any general compliance changes that may be being pushed out, so that it doesn't catch them by surprise when there might be a renewal for that following year. I think that's been the best practice that we've seen in order to keep folks compliant with their groups there.
Okay, cool. Thanks for sharing. I want to move to topic number 2 now, which is, rideshare and TNCs. How is this affecting the NEMT industry? People always hear about, is Uber or Lyft getting into NEMT? What's going on with that?
Yeah. So it's very interesting. As you mentioned, Uber and Lyft are entering the market, and I know a lot of operators have seen this happen, where these behemoth companies come in, they think they'll do a really great job, and reality is the operators have always been far and better performing compared to some of these larger groups that are just doing this for the first time. So what we've been seeing, again, insurance trend-wise, it's been really crazy. The last 12 years of the commercial auto insurance market, there's never been an up year. Insurance companies have lost money on commercial auto insurance the past 12 years, except during COVID, when there was no one on the road to have an accident. What we've seen in the past 4 years is that rideshare has introduced now something like 1.5 to 2x the claims in their severity, because there's more vehicles on the road for businesses, and there's also more exposure to random risks. You're now taking random people into your van and moving them around. So what we've seen is that rideshare has made the market even worse, and it's left insurance companies cutting these types of businesses out of their coverage, and has also left any NEMT operators that may do this as an additional part of their business totally stunted on their insurance. So we've seen a lot of insurance companies now raise rates for any NEMT operators that may be adding that as a service, just because Uber and Lyft have sort of ruined the insurance market for anyone that is involved with that as a business. It's also resulted in higher rates for folks who are not offering that, just because these rideshare services have now increased the riskiness of commercial auto in the past few years. So the trend has hit operators harder than what we expected generally. But I think that actually will adjust down in the next 3 or 4 years now that we're generally cutting rideshare out of the coverable equation for a lot of these insurance companies.
Okay. Well, give me some silver lining here, Niko. Like Uber and Lyft, I mean, what do you think is going to be the future of their sort of efforts to get into NEMT at this point?
You know what's funny? I've actually, talking to the teams there, I've seen that there's opportunities for them to become more and more of these transport brokers purely. So continually partnering with operators to bring more rides to them. I'm not 100% sure where the movement will go, if it's going to continually be bringing the internal Uber network more rides, so folks who are just members of Uber there, or opening up that more to more operators. But I think the end outcome in the next few years will be Uber being another potential revenue source for operators. And also now, as rideshare and NEMT obviously continue to separate, having less and less of an impact on their insurance coverage too.
Interesting. All right. Well, let's move on to topic number 3. Why are insurance premiums going higher for NEMT businesses? And, obviously it's happening in some regions and areas across the country more than others. But in general, like what's going on there? Like especially the places where, in recent times, in the past year, even insurance premiums have really spiked up year over year. Like what's going on there?
Yeah. So like I had mentioned, commercial auto insurance has never seen a positive year. The insurance carriers have lost money on giving commercial auto as a coverage for the past 12 years, and it's only gotten worse. And the only positive year was during COVID, when there were no rides being done. There was really no one on the road. So much harder market the past few years. What we've seen now is that, along with industries like the property insurance industry, where storms have continually led to losses in the insurance market, a lot of insurance has become destabilized. And so the insurance companies are looking for ways to counteract that. Principal way is to raise rates. How can we survive some of the harder years in insurance? We'll charge our customers more, which puts operators obviously in a tough spot, because they're now forced to figure out the best way of decreasing their rates in the market. And the best way to do that is to be less risky as a business. So what we've been working with folks on, and some of the things that we've been developing on our end, what we've done is start partnering with our carriers, so the insurance companies that offer these products. We've been bringing software solutions to them, where we can say, hey, these are things that are making our customers less risky, and giving them the opportunity to keep their rates low for longer periods of time. So one thing that we've seen as a really interesting trend right now to try and keep those rates low are bringing solutions like Bambi to these insurance partners, with the idea that with, for example, scheduling, if we're doing that correctly and consistently, that's something that reduces a lot of the risk of these businesses, and is something that, talking to our insurance partners, there's a real opportunity to keep rates consistently low for parties that are adopting tech like Bambi in their everyday operations. So something that we see as the best way to fight against these rising rates, and we've seen it now too. I think a lot of people talk about telematics as the holy grail of a lot of this. So adding cameras into cars, and then the continual steps to take on the software side will only keep rates lower for the operators that take the time to do it. So that's what we're hoping to see more of in the market. As things just get harder generally, the folks who take the time to adopt really great tech to make themselves less risky will see the benefits of lower rates.
And can you explain Sparx in general? Like, How did you found the company? What is your guys' secret sauce about how you're getting insurance to NEMT providers so fast?
Yes. So the quick pitch on Sparx. We are a tech-enabled insurance brokerage. We solely focus on the medical space, namely medical transportation and medical malpractice. And what we've done on our inside, we've automated almost every part of the insurance shopping process. So we take our expert insurance brokers on our team who were ex-operators in a lot of these businesses, and we pair them with our platform that takes the applications for these businesses and shops them across 150 carriers automatically. So we send it out to every part of the market we can, and then we get back as many quotes as we can. And that's where we can present the best options to our market to be able to bring the best coverage at the best rates for operators of these medical businesses. So that's our main goal, really, at the end of the day, is to move quickly for customers and make sure that we're exhausting every option in the market, and then continually move towards this future where we can partner fully with our insurance company partners and start offering ways that these operators can keep their rates low by bringing in interesting technology, interesting software, also makes their lives easier. So that's how we've designed our system and hope to continue to push there. When it comes to the hard numbers, what we've seen most folks experience is a 45 to 60 day quoting process. So a mixture of different applications, different pieces of information they need to pull together from all these different sources. So what we've designed is a smooth line quoting process that takes someone 10 minutes to pull together, and we can produce quotes from our different carrier partners within 7 days. So that's the benchmark that we reach for, is a 1 week turnaround on the most expensive, most comprehensive coverage that they usually experience, but giving it, cost effective and quickly to keep their business protected.
So you're telling me that you've turned a 45 to 60 day insurance quoting process down to 7 days?
That's correct.
Not bad.
Yeah, right. We do our best. And then what we see on the premium savings side too, it's different for different types of businesses, but I think generally speaking, we've seen folks end up with quotes anywhere from 10K to on the top end 20K per vehicle, and so a lot of our partners come in around 5K per vehicle for a lot of that more comprehensive coverage that groups like Motive Care are requiring. For the more basic coverage at the simple 7, which we hope more of the market hits, we come down as low as 2K per vehicle. So that's where we benchmark and hope to keep operators very cheaply covered across the board.
So are you telling me that you're reducing insurance premiums for NEMT businesses by roughly 75%?
On average, that's the plan, is for folks that we can deeply partner with and put them on some of our suggested ways of reducing the risk of their business. We see premiums drastically fall.
This sounds pretty game changing.
Mm-hmm. So that's the hope, is to continue to work with folks on, again, keeping them covered long term and cheaply. So,
Niko, can you share with me some stories of NEMT businesses that you've worked with where their insurance policy was out of date for the broker they're working with, their premiums are going up, you and Sparx came in and turned things around for them?
Yeah. So one group we worked with recently, they had just come from, again, Motive Care, and they had a policy that was recently expired 2 or 3 days before they reached out to us, only because they had gone to Motive Care and they received the unfortunate news that there was nothing they could do. It was out of compliance. They needed to go find some new coverage. So they referred them to us since we're preferred partner for them, again, in several of their states. When they started working with us, what we were able to do was turn around a quote within 3 days to get them back up and running, back again within 3 days. So something where a normal broker would have kept them out of business with Motive Care for anywhere from a month to 2 months. So something that we were able to turn something around incredibly quickly to get them back on the road. And that's what we really prioritize, is making sure that our operators are not stressed about insurance, but instead are worried about bringing great service to patients and keeping their drivers on the road and serving great customers. So
I love it. You guys are really making a big impact in this industry, making it viable for NEMT businesses to operate profitably. For everyone watching, I'm putting the contact info of Sparx in the description of this video. Niko, what is the best way for NEMT businesses to get in touch with you guys?
Yeah, so we'll include the my teammate's email, Ryan, who is the head of our practice, focusing on medical transport, and then also include my personal cell. So feel free to give me a call or a text for any needs that come up.
Awesome. Niko, thanks so much.
Run, Bambi, run.
Awesome.
Cool.
Thanks, Niko.